Have you ever wondered how banks, the cornerstone of our financial system, turn a simple savings account into billions of dollars in profit? Is it just about loans and interest, or is there more to their money-making machine? Banks play a big role in the world's financial system. They provide many services, from simple checking accounts to complicated investment instruments. Even though they help people, companies, and governments in important ways, their main goal is to make money. How do banks make money, though? The answer comes in their many ways of making money, such as interest, fees, investments, and new financial products. Interest income is what banks are all about. Interest income is the main way that most banks make money. In this case, you make interest on loans and other credit products and pay less interest on deposits. How it works: loans and mortgages, personal loans, mortgages, auto loans, and business loans are all types of loans that banks give to people and companies. People who borrow money pay it back with interest, which is usually higher than the rate banks offer on savings. In this case, a bank might offer 2% interest on a savings account, but charge 6% interest on a mortgage. Banks make a lot of money from this gap, which is called the net interest margin. Credit cards. Another way to make money is with credit cards. Banks charge interest rates that can be anywhere from 15% to 30% a year on balances that customers keep open. Credit cards are one of the best ways to make money for banks because they earn high interest rates and fees. Interbank lending. Banks give money to each other, but they charge interest on these short-term loans. This kind of action happens a lot in the overnight lending market. It helps banks meet their cash flow needs and makes them extra money at the same time. Fees and service charges. In addition to interest, banks make a lot of money from fees for different services. Most of the time, these fees are small, but they add up because of how many transfers there are. Account maintenance fees. Many banks charge fees every month to keep your savings and checking accounts open. Some accounts don't require you to keep a certain amount of money in them, while others bring in steady income for the bank. ATM and transaction fees. Customers may have to pay fees when they use ATMs that are not in their network or when they do certain types of activities. Charges like these help a bank's bottom line. Overdraft fees. Customers are charged overdraft fees when they take out more money than they have in their account. These fees are often a source of disagreement, but they bring in a lot of money for banks. Foreign swap fees. Banks charge foreign transaction fees when customers use their cards abroad or swap currencies. These fees come from businesses and travelers around the world. Investment and advisory fees. Banks charge fees for services like portfolio management, retirement planning, and wealth management for people who want help with their finances or investments. Trading and investments. Banks also use their money to make money by investing in financial markets. Even though these things are risky, they can pay off very well. Investment in securities. Banks buy government bonds, business bonds, and other securities. Their income comes from the earnings on these investments. Some banks use their own money to trade stocks, commodities, currencies, or swaps. This is called proprietary trading. Even though this can make banks a lot of money, it also puts them at great risk, which is why rules like the Volcker rule are meant to stop it. Wealth management services. Investment banks and larger commercial banks often take care of funds for wealthy people and businesses. Based on the size and success of the investments, these services make money through fees and commissions, income that isn't interest. Besides loans and fees, banks are always looking for new ways to make money, so they don't have to rely so much on loan income. In the past few years, income that isn't interest has become more important. Products for insurance. A lot of banks work with insurance companies to give products for property, health, and life insurance. They get paid when these sales happen. Merchant services. Banks help businesses handle payments by offering services like credit card transactions and point-of-sale systems for a fee. In asset securitization, banks group loans like mortgages and car loans together and sell the securities to investors. This method, called securitization, lets banks make quick money and shift risk to other people in the market. Collaborations between digital innovations and fintech. With the rise of fintech companies and digital banking, banks have turned to technology to help them make more money. Online banking fees. Some banks charge extra for advanced financial tools or special online banking services that can be accessed through digital platforms. Mobile payment systems. Banks get paid transaction fees when people use mobile payment apps and systems. Working together with tech companies has opened up new chances in this area. Data monetization. Some banks make money off of customer data by giving anonymous views to third parties, like marketing firms and stores. This is controversial. Services for international banks. International trade and cross-border services services bring in money for global banks. Trade financing, letters of credit, currency hedging, and export financing are some of the ways that banks help foreign trade. It costs money to use these services, and there are interest charges. Currency exchange. Banks make money from foreign exchange deals by adding a margin to the exchange rate. Remittances. Sending money to other countries, especially in places with a lot of expatriates, brings in a lot of fee-based money. Real estate and assets owned by banks. Banks often have large real estate investments and other assets that help them make money. Branch leasing. Some banks rent out office space in their branches that isn't being used to other companies. Repossessed assets. When people don't pay back their loans, banks take back the collateral, like homes or cars, and sell it to get their money back. Problems with the way banks make money. Banks have many ways to make money, but they also face problems that can make them less profitable. Economic downturns. When the economy is in a slump, more loans are not paid back, and interest income goes down. There are also stricter rules and more attention on banks. Changes to regulations, fees, interest rates, and trading actions are often limited by governments, which lowers the amount of money that could be made. Competition from fintechs. Low-cost digital startups that offer banking services have shaken up traditional ways of making money, causing banks to come up with new ways to make money and lower fees. Long-term low-interest rate environments. When interest rates are low for a long time, like they were after the 2008 financial crisis, net interest margins get squeezed, which hurts banks' profits. Future trends in how banks make money. As the financial world changes, banks are looking for new ways to make money while also meeting customer needs for openness and low costs. Green finance. Many banks are investing in long-term projects and giving out green loans to make money and help environmental causes at the same time. Blockchain and cryptocurrencies. Banks are looking into blockchain technology to make payment systems work better and are charging fees to store cryptocurrency. Subscription models. Some banks are charging for luxury services based on subscriptions, which gives them a reliable way to make money. AI and personalization. Banks usually charge more, but are able to offer personalized financial advice and goods by using AI. As institutions, banks have many uses and many ways to make money that go beyond giving money. They make money in a lot of different ways, such as through interest and fees, investments, and new digital technologies. Their future success, though, will depend on how well they can adjust to changes in regulations, the economy, and technology. Figuring out how banks make money takes the mystery out of how they work and shows how important they are to the economy. If you're a buyer, an investor, or just interested, understanding how banks make money can teach you a lot about the financial world. Enjoy the deep dive into how banks make money? Don't forget to hit the subscribe button and turn on notifications for more insider insights into the world of finance and banking.